The second quarter of 2022 began with the rand weakening by 7% against the US dollar and other major currencies. This renewed fears that inflation may spiral out of control. The war on Ukraine continues to wreak havoc onto the supply chain markets of gas production in exports in Europe and exports of sunflower oil and wheat into the global markets. In terms of the South African context, headline inflation has pierced through the upper band of the SARB's inflation target at 6.5% in the latest print. The main contributors to this inflation impulse has been food and energy prices, particularly cooking oil. The impact of rising inflation is that the SARB must continue its restrictive monetary policy by raising short-term rates. A rise in short-term rates means that the yield curve continues to flatten, and that puts nominal bonds under pressure relative to inflation-linked bonds. Inflation-linked bonds continue to be favored because of their inflation hedging properties. Rising short-term rates also means that there is a drainage of liquidity out of the economy, which puts GDP under pressure, and therefore risky assets such as equities and listed property stocks. The performance in Q2 2022 reflects this phenomenon. During the quarter, inflation linkers returned 3%, cash 1%, equities minus 11%, listed properties minus 12%. This return distribution reflects the risk of rising inflation expectations in terms of the asset class performance. We do not foresee changes in these dynamics in the foreseeable future.